Hello and welcome to another episode of NRG Insights. At the moment we are going through our lender series, which has been brilliant so far, and we're speaking to influential people within the lending market to give them their say. You know, I think we've had a lot of brokers on. They're very good at speaking about lenders, so I thought it'd be great to get the lenders on side and have a chat about the market and also the individuals as well within that market and how they got to where they are. So today I've got Sundeep Patel from UTB joining me. Thank you, Sundeep, for coming on.
Delighted to be on.
So let's start with, tell me about your financial services journey. I know you've been in it a while and you've worked your way up the ranks. Talk to me about that.
Yeah, so just over 20 years now, going back to the beginning. So my uncle worked in Barclays in the city. I'm born and raised in Bermondsey, which is a stone's throw from the city. Most of my family was self-employed, worked 7 days a week in their own businesses. My uncle was the one that I saw from an early age, had holidays, had weekends. And once, I can't remember, maybe when I was 14, invited me to lunch at Barclays.
Yeah.
I went to see him and really liked what I saw. And at that age, coming from Bermondsey, those that don't know London, Bermondsey is a traditional working class area of London. It was like on our doorsteps, but seemed like a world apart. I thought I fancy a bit of this, to be honest, and studied hard, got my GCSEs, went on, managed to get into uni, literally in the city at London Guildhall. So I now actually work across the road from where I went to uni.
Oh, really?
And did economics and financial services. So very focused on what I wanted from an early age.
That, actually, so you did. Most people say they fell into it. It's really interesting that you.
No,
ran at it.
I knew I wanted to do this. Inspiration was my uncle from what I saw. Amazing. Compared to the rest of my family. And then left university. Got initially it was hard to get a job, so started off working as a trainee financial advisor with Zurich, Allied Dunbar in the old days, and from then realised I had an interest in lending. Joined Halifax, which used at that time lent 1 in 4 mortgages in the UK, in the intermediary team in London. Started off underwriting, moved into broker relations. And then from there I went to work for a fairly big IFA in the city, helped convert them into being more of a mortgage lender as the mortgage market was really booming. Then the credit crunch hit, managed to land a job at RBS, one account. RBS then ran into a little bit of difficulties that I'm sure everyone's aware of. So thought, okay, what happens next? But I managed to retain my position there and did really well there for 7 years. Really enjoyed it. Broker side, on the other side, obviously as a lender. Then specialist lending was really picking up in the UK. Got the opportunity to have a chat with Alan Cleary at Precise. Who I'd known when I used to be a broker, and he was at BM, so different relationship then. But took the punt, went over to specialist lending, had a great time with Precise. Moved on to Together after that, stayed in specialist lending, different end of the spectrum, Together in terms of its lending offering. Learnt masses there, massive development for me, not from just the product side, but from the responsibilities. You know, got to sales director there, which was a big responsibility, particularly post-COVID. Really pleased, and then just wanted to be somewhere a bit closer to home, and opportunity arose where it aligned with my values a bit more, and so came and joined the guys at UTB just over a year ago. So that, in a nutshell, is a high-speed journey of where I started and where I am at the moment.
Just to clarify that as well, you've kind of risen through the ranks as you've gone, haven't you? There's not many sideways steps in that.
I've been, started off as a junior underwriter in the industry, in the lending side, to being sort of a mortgage operations manager at a brokerage. BDM.
Do you think that helped you, Sundeep, going from being broker? Do you get it when you're lending? Like, you understand I would not say
Yeah.
term gamekeeper, but you know what I mean, working both
One
sides
of the
of
key things, you know, when you're working for a lender and you're responsible for people, is internal people, like underwriting staff, is they don't understand the broker culture.
Yeah.
Because they're underwriting the deal, and quite rightly they're doing it as per policy and criteria. But it does help when you can bring insight into what that broker's been through, how he's gone through the selection process to get to us, what they're promising the client, what they're delivering, the pressures the client puts on the broker.
Yeah.
And it definitely helps, because you get a balanced view then. And I think brokers appreciate that, because, you know, I still speak to many people and it's like, you know, they'll say to me, but you understand how it is, and they know that because I've done 7 years working in a brokerage. So
yeah.
You know, it makes sense. But it does help. And the one thing I always encourage is, as long as it's feasible, is to get people that work in underwriting and internally, get them out and about with your BDMs, your sales guys, just occasionally, so they can get a feel for it, because it will open their eyes.
Yeah. Do you know what, actually, funny enough, someone else has said that in the lending market, that getting underwriters out with BDMs is, we actually talk about the crossover between underwriting and BDM, because obviously they're very different skill sets. But we do see some of the best BDMs and some of the best sales people have come from an underwriting background as well. So there is definitely a need for understanding that technical side, as well as you know, you've got to be a people person, right, in the sales side.
Understand 100%. Yeah, it does. And it also, when that you know, next time they have that conversation on the phone and stuff, or, you know, however they communicate, there's a better understanding. The tone tends to be better.
Yeah.
You know, on both sides, the broker appreciates a little bit more on the underwriting side, and likewise it gets. Again, it's not rocket science, but it's having the culture and encouraging people to do that.
And it's a difference maker as well. I know you say it's not rocket science, but that's the difference between a good or a great and an average underwriter, right? If you can actually get across the issues in a way that the broker understands, and much the same as broking. If you can give your examples of the way an underwriter would understand, then I suppose it's that's just a separation from being good to great.
Yeah, no, it's right. Yeah, I think the one thing, you know, just to end on that point, is the fact that a lot of people are potentially scared to go out to see brokers, you know, and I think it helps when you can say, do you know what, they're absolutely, it's fine, and actually they want to see you, and it makes sense. I mean, initially, I won't mention names, but I used to take people out, and I used to say they're for marketing, just so that they felt comfortable. You know, they were going to get, I've got these cases going wrong, what's going on? So, you know, just to make them feel comfortable. And then, you know, then once they got realised that actually, do you know what, they're not that bad, you know, we can all work harmoniously. Yeah.
And I think brokers get it as well, right? Like underwriting have got a job to do. They've got to make sure that it's safe for both parties.
Yeah, I mean, you know, it's, depending on which, you know, level you talk to, but ultimately, our industry doesn't exist without each other, so you know, you're going to have to get on.
I think it's interesting, even if you look at like, it's just kind of be ironic about moaning about people, because therefore I moan about them, but you see it on LinkedIn how people moan about lenders, and you don't see it the other way, obviously, because you understand you need them, but I don't think they fully understand that it's half the piece of the puzzle, right? It's, you can't do it without each other. It's remarkable how easy it is to bite the hand that feeds you.
Yeah, there's I mean, because I've worked in that side, if you're in the brokerage side, you know, you really don't want to burn any bridges, to be honest. And you know, and I know that from when I worked in that side. I would say there's certain times decisions are made for banks, non-banks, that, you know, if you look at COVID caused quite a bit of situational, emergency situational issues for a lot of lenders, typically, particularly those that were non-banks. And so, you know, some of that can be communicated and some of it can't, but ultimately as a lender you still do at the core of your business want to lend, but you've got to make sure it's responsible but also sustainable, because there's no point lending for 6 months and then going out of business. You want to be there for the future, because actually as a brokerage and as a customers, you want us in the market for the longevity, because that's a proper relationship. You know, to do stuff and actually a lender puts itself into situations where they really are stuck. You know, look at the States as a good example. When banks get into trouble there, it goes downhill pretty quickly. So, you know, I think sometimes certain parts and certain times there are frustrations, and I get it, because the broker's got to deal with a client, and the client's obviously going to put pressure on. But there is an element of educating clients that, you know, banks have to make prudent decisions and have to be sustainable, and sometimes it's for the right outcome, and a no from a lender is actually right for the customer. You know, just because the customer thinks it's wrong isn't necessarily the case.
But like you said, you get it from the other side, right? Brokers, that's what they get paid on. They get paid on completions, don't they? So you understand frustrations, but at the same time, both sides have to appreciate that they both want the same thing.
Yeah, and I think the key is that I still haven't, you know, worked it with a lender or anyone who at heart wants to do the right thing and wants to lend. But, you know, COVID's one thing. We had the mini budget issues last year. You know, these things, you know, do affect the risk and sustainability of lending institutes, and so you've got to react accordingly. But you're reacting not just to protect the lending side, but, you know, we employ people. We've got to protect our people as well. Yeah. You know, so there is a bit of social responsibility that comes into it as well.
Yeah, that makes sense. I do think I don't want to word this wrong. I do think brokers that understand the market understand your problems. I think if you look at some people that have been brought in and maybe not educated as well, especially when the interest rates went crazy, or the COVID side of things, where everything was, like you said, money at that level was unsustainable. So all they talked about was cutting rates, like you wanted to not lend, or, you know, increasing rates, or cutting loans to values, or whatever it was. But I do think the more educated a broker is, they get it, and then they can communicate to that client. So it's not like, oh, well, poor us, and then you communicate to that your client, poor you. It's, this is what happened, this is the reason. I think there's a massive educational piece to learn, that not everyone is fully up to speed with what happens with money once it's lent. Or, you know what I mean?
It's you know, you know, we're at UTBs, you know, obviously it takes deposits in, you know, and funds our lending and stuff, but, you know, the rising cost of funds, you know, at the beginning part of last year for virtually all lenders was, you know, almost unprecedented. It was a big thing. So, you know, being very blunt, there's no point being a busy fool.
No. So lending out loads of money, you can't get it back, or it's not money.
You know, and then obviously, where's the prudence in that? How is that right for the client? You know, and actually, so there are elements, but you are right. There's most of the brokers, you know, that I come across, especially in the specialist lending side, understand and get it. But I know what you're saying. I saw a few of the posts on LinkedIn throughout last year where people were having a pop at.
I get it, like it's a bit of therapy, right? If you're around each other, it's a little bit echo chamber, but yes.
Yeah, but then, you know, it's go back to my point, you need lenders to lend. You know, if you're a broker, you need to find a lender to lend, so we have to work and stuff, and, you know, but, you know, I would say 95% of brokers appreciate, especially in the last 2-3 years or post-COVID, how the world can react. Don't forget, before COVID, 15 odd years, everyone in the UK was used to cheap interest rates. You know, lending, but, you know, by 2007, 2008, lending was pretty much just pretty simple and stuff. And there's a lot of people that didn't even know interest rates went up.
So just flat.
It was a big shock to some people.
They only go down by a couple of bips. They don't actually.
They go up, and, you know, and it's like, well, what's going on here? So the era of cheap money came to a sort of a quick end, you know, shall we say? And, you know, we're seeing now.
That was a long time though, wasn't it? I do think that, like, if you haven't been in the industry over, say, 10 years, you've never seen a tricky time. Actually, you thought COVID.
You've never seen a base rate drop, you know, until they went up. You've like base rates go up. It's haven't for 10 years, and then that actually educates you, because you're like, wow. I mean, it probably shows your age to an extent, but it also means that, oh, actually, these people genuinely do not know. So if you're a new broker coming in, that's
also a part of getting better as well, right? Because it leads to a bit of complacency in the market, where it's just very easy. There was no real sort of selling involved. Everything was quite transactional, because everyone could lend money. You know what I mean? So, everyone could borrow money. So I think actually these little blips in the market are a good thing for the industry, right? You can learn a lot from it, and you can sharpen your tools.
You know, the way I see it is that we get a bit of a sense check now and again. You know, and there's no harm in that, because you know, if you look at you know, I'm a landlord and stuff, and
Taking
really
a bit of a hit.
I've had it been 15 odd years, been a landlord and stuff. But when rates went really high because of the mini budget and stuff, even an experienced landlord like me, I was like, whoa, I'm going to feel the pinch here. As a business, I'm going to feel the pinch on this. And, and I know rates go up and stuff. And it's like, so imagine if
no one could have guessed that, though, could they? No one, there was no economist in September of the year before saying, "Oh, don't, this shit's going to."
No one saw that. But it's if it's taken someone who's in the industry, who's been a landlord for 15 plus years, and even they're turning around saying,
sure,
this is going to be interesting. But imagine if, like you said, you've come into the industry and you've never seen rates move up. For them, it will be like, well, this is a seismic change in the market.
Yeah. That makes sense. Good. I've dwelled on that a long time. What I wanted to speak to you about actually is leadership, which has come across. It's come across a lot in this lenders market, and that is because, I mean, I don't know if it's just by chance that who I know and that kind of thing who have got on, but you came from a bit of a super team at Precise, right? If you look, and when I say super team, your name obviously gets mentioned in that bunch, but everyone you look at in that team has now gone on to head of, director of, sales manager, whatever it is, MD, and obviously it was built, that team. It wasn't built to build good leaders, but it inevitably did. What do you think was the kind of magic there? And I know you all came from different places and have learned lots of different things, but what do you think the key elements to that team were?
I think there was a good number of us there, and we're all actually still good friends and good colleagues. It shows you the culture we had was quite unique. Precise was a very much play hard, but also recognition was there, and that stems from Alan at the top, Alan Cleary. He really made us feel valued. He appreciated and made sure Precise as a lender appreciated what we did as a sales team. Roger Morris, was in charge of us. Roger was always encouraging and supportive.
I had Roger on the other day, actually. This is what I was bringing up about it.
And he genuinely, was a positive. He's a very positive man, and I think that for me is was very encouraging, especially coming from a retail bank like RBS NatWest Precise. He made the transition very easy.
Was that quite a big culture shock for you, going to that like work hard, play hard type environment?
It was a bit of a culture shock, going from offices we've got Bishopsgate in London for RBS, massive offices, and then Brindley Place in Birmingham to base, a medium-sized place outside of Wolverhampton. That itself's a shock. And I'm born and raised in London, so for me, travelling past Watford was a shock. The reality is they made you feel very welcomed, and we went out. We promoted specialist lending through education. I think that was one of the key things Roger was excellent at getting us to do. And we knew Roger and Alan had as long as we worked hard, Roger and Alan had our back, and that was recognised because they would consistently go out and meet brokers, and brokers would tell them that, your guys are actually doing good. And I think that positivity just worked, and it was carried through. And so we always knew we worked hard, but we always knew that we were still in a happy space. And we all had each other's backs to a degree, and that was a very comforting thing as well.
I love that as well. No one else has really made that connection that like good leaders have your back. I think that's really good because it means you can go out and grow as well, right? You can go out and be
and if you make a mistake,
fearless,
you back. So when you work for a big retail corporate, you do have to be conscious that you have to. Should I do this? Should I not? Do I need to ask? At smaller, obviously, Precise smaller outfit like most challenger banks, and it was actually, do you know what? You're doing the right thing, just do it, go and do it, and that's really good. And like most things, organically, they grow, they've grown, UTB have grown, everyone grows, but to have that your core does build a great culture.
Let's talk about that some more, about culture. Obviously, core being, I'm absolutely fascinated, one by leadership and two by culture, because I think we got it wrong a bit with what we think culture is sometimes. It's very much what people have written on the wall at their, and ping pong tables and beanbags, as I wrote this morning on LinkedIn. It's a bit bullshit, isn't it? Because there's so much more to culture. Like you guys clearly worked hard there, and that was part of that is culture, right? Work ethic. But what else do you think adds to builds that kind of culture?
So it's one of the most difficult things to do in an organisation, particularly if the culture's not great. The first thing is to identify that, because most people, if they're in that culture, will just think this is how it is.
Yeah, it's strange, isn't it? When you go somewhere great after being somewhere average, and you go, "Oh shit, this is how things should be." Because I was told I had a good culture at the other place.
Yes, and exactly, and you are right. There is a lot, being very honest, there is a lot of stuff in our industry as well as other industries where you get a lot of lip service.
Yeah.
Oh, this is culture. This is what we're good at. This and that. But really, culture is measured by your people, in my view. And various organisations now consistently do engagement surveys to engage this, which I think is excellent.
Yeah.
And that's your first starting place to learn whether your culture is actually good, because you're getting feedback, the important feedback, not from an external person coming in telling you what good culture is. Find out first what your organisation thinks your culture is like,
what
and
works.
then work on that. And what works.
It is interesting, actually, because if you speak to any CEO or MD or founder, whatever it is, that says, "Oh, our culture's not very good," like everyone believes. Like for my business, in my heart of hearts, I believe we have a great culture, and I couldn't imagine anyone not enjoying working there. But I don't really know, because people do blow smoke, right? People will tell you what you need to hear sometimes. But those employee engagement surveys are really interesting. I mean, we're an 8-man business, so I think I'd probably guess who's who. So it's a little bit different. But as you get larger, surely that's what you need to listen to other people rather than what you feel, because
100%. And also you've got to, and this is where I found it's improved over the last 5 years, I would say, but before, the feedback was dealt with. If you got negative feedback, then it was how dare you sort of situation. And actually, feedback's good or bad. You have to be accepting to whether you're going to get good or bad feedback. We all get you buy something and you get a email or a text saying, "Oh, how this and that," and if you say it wasn't great, "Oh, can we have a further chat? Why did you say that?" Well, you asked for the feedback, I gave it to you. Are you trying to say, "Oh, I need to give you a 4 or 5 star rating to help your Trustpilot"? Well, so I think for me it's but the one thing that I've done that, and I've always believed in here and at previous places, is that it's have a one team culture. I strongly believe in that, a one-team ethos, and it's when I joined UTB, I made it clear to the bridging team, which I oversee, that for us to succeed is that be it sales, underwriting, credit, servicing, we all work as a team, and then we go out to the wider bank and we collaborate accordingly, and we will get results. And brokers now, and I think now feel as well that we're a much more approachable team, which is good, because you always have hierarchies, and quite rightly you need them for various things and management structures, but if you run off as best as possible a flat structure, then people feel valued. So one of the key things I think is a good measure for me, and I get it verbally because I ask everyone, I'll take groups of people out that have been here 6 months for coffee, and then I'll say, tell me what's a bit like match of the day, too good, too bad, how do you find it? Do you think we value people? Because people is one of the big values at UTB, and it's one of the reasons that I was interested.
It's your most important thing. I mean, obviously I come from recruitment, so I'm always going to say that, but people are the most important thing that's sometimes paid lip service to, whereas you concentrate on absolutely every other aspect of your business.
So I will openly engage with them, take them out in groups and that, and get the feedback, but what I get back is it's really good that you're approachable and you're willing to listen. Doesn't mean we agree and do everything they want, but at least they know that it's like an open door policy. You don't have to fear talking, and actually some of the best changes we've made this year have come from people that have been here 5 years plus, but haven't been able to speak up. Really? So all of a sudden they felt, or they have, but they didn't feel like they could pursue it with passion. And I've made it clear that if it's a good idea and we can feasibly do it, don't give up on it.
I suppose that comes from that fearlessness that you were taught previously as well, right? So if people are fearless, and that includes approaching you know, the management levels in your business, then it's only ever going to improve as long as you take it on board. I mean, on a personal point, like, it's a bit of an ego thing. So I was talking about this about someone yesterday, and he's the CEO of a bridging lender, funnily enough, and he was saying about the feedback. Feedback gets easier to take as you get older, because you're slightly wiser and you kind of got less of an ego. How has it always been relatively easy for you to take kind of negative feedback from people, or is it something you've learned or mastered?
I think when I was in sales roles and stuff, it's a bit harder because sometimes you feel it's a bit personal at times. But and let's be honest, I am a salesperson at heart, and I don't deny that. And so you naturally tend to be a bit more passionate. Yeah. But I don't disagree. I think it's right. You know, when you get exposed to roles where you're not, you know, sales is just a part of what you do, you then start to appreciate wider elements of the business, and it does become easier to take feedback. But I think the best thing is taking the feedback, but then knowing how to address it, because what's very important from my perspective is listen to the feedback, then very quickly get those people together to say, we've listened, this is what we intend to do, or what would you like us to do, and then come up with an action plan, and then regularly communicate to show we are trying to deliver based on feedback. I think that wins you so much trust and faith. It's unmeasurable. But, you know, it's making sure when you're in that position, you know which teams and which stakeholders you need to incorporate to get that feedback levels where, you know, to address the feedback. Yeah. Because I do feel, you know, I've experienced it in 20 years in the industry, you know, and I put my hand up. You've given feedback, but nothing happens.
Actually, I was going to say that you also got to acknowledge it if it's not right for the business as well, right? And you've got to show why it's not right for the business.
Correct.
Good feedback's amazing, but sometimes feedback isn't great, or isn't a good business decision, if you like. But then you've got to kind of acknowledge that as well, right? You've got to do the good and the bad.
But that's the, you know, last year was, you know, a unique year, you know, challenging. So we had questions like, why are our products like this? What's this? Why are we doing this? And great questions, and really pleased they could ask those questions. But then you have to address them, and you address them professionally. And it's like, so do you understand why we are where we are? And then they were like, okay, I get that. I didn't think of it like that. You know, there was a lot of change last year. And forget the market instability. Consumer duty, if you're in a regulated business, was a massive part. And you know that took a lot of time and effort, and you know, the outcome of that is very important, because you know, you're doing it for the customer outcome, and I fully endorse what consumer duty and the spirit of it is. However, explaining
legwork in the first year though.
And explaining to, you know, 50 plus odd staff what we're doing, why you're doing, why we need to change, and that but you do have to take the time, you know, and you do have to explain that. Otherwise, people will go away thinking, well, what's this in aid of? What's this a part of? And that if you show the impact,
go back to that old parenting adage of when you go just because. You know, you tell your kids to do something, you don't really explain why, because you can't be bothered to do it 20 times. You can't. It has to be a lot more of a. I'm sure. I mean, I'm a nightmare for that with the kids, because you can't. I've got 4 of them, and telling them all the time, but because I've said so, is awful. And it doubles down if you're a leader as well, right? You've got to explain the situation.
Yeah, it does. Yeah, and I know. I mean, I've got 3 kids, and I know, and sometimes you haven't got the energy. So you know, and I do get that. But I think if you look at the generations now that are coming through, not just in our industry, they are expecting more engagement. They are expecting. To their credit, they feel they are able to challenge and talk to management, you know, which, you know, when I started in the industry, you'd think about 5-10 times before you pose a question to senior management.
But how do you cope with that as, well, I mean, we're kind of similar ages, but how do you, it's probably the same issues with the kind of the next generation along. It's very different to how we were trained, or very different to how we sold. But then we have to appreciate that it's changing times, right? People want to treat differently.
So that was the key thing. You have to appreciate the current environment we're in and the way things are done now. I mean, I've benefited personally massively over the last, you know, probably 10 years, 5 years, when, you know, diversity and inclusion is starting to become a serious topic in the finance industry, and particularly in our industry, because there's a lot of stuff, and I'm saying this, very very openly, but
Yeah.
If you wasn't the stereotypical person, then you wouldn't actually know there were issues.
Yeah.
Because you're not aware of it, because it doesn't impact you. And before, you would be whether you're non-white, whether you're a lady, whatever it may be, you were hesitant about what you could say, you couldn't say. But because it's become more open, more talked about, especially with the new generation, I think that's benefited the industry greatly.
Yeah.
And I actually do feel that, at times in my career, I thought I've been top performing in whatever role I've been, felt like I've hit a ceiling, couldn't understand why, and stuff. But also, it wasn't the done thing to say anything, and it was very difficult. But now, I don't think anyone would have that issue. They would say if they felt unjust. Yeah, and I think so. That's brilliant. And so I do think, but you have to. I don't discourage anything. All I say is to, especially staff, young staff joining, is that they've got to get the high level view of the business, is that we are a bank, we're here to lend responsibly, and we're here to make money.
Yeah.
And these are our values that underpin it. And if our values tie into what you believe is right, then do you know what? That's a good start, because then socially you'll feel this is a place for you to work. And it's important, because there's some people that may disagree with things that we do and stuff, but that's absolutely fine. But then it's their decision then to decide, is this the right fit for me or not? I think you've just got to be transparent.
How do you get your value? I know transparency is one of your values, so just leading on to that, but how do you, as a much bigger machine, for instance, for me, 8 team members, we're sat in one room, everyone knows our vision, everyone knows our values, it's a really easy thing to get across. If you're a bit more of a monster and you've got a lot of people to get that out to, how do you make sure everyone adheres to that and understands your vision, understands your values? How do you go about that on a larger scale?
So what UTB do really well is, I think for the majority of roles, if not all, you will always have a session with a member of HR during the interview process.
Yeah.
And that is primarily for them to understand our values and, our culture to a degree. We do a lot of social stuff for staff. We have, I've worked for 20 years in the industry. I can genuinely say, if you worked here, with my experience, it is pretty good the way they value people. Literally, there's not many places I've seen that, and even now with other people, they're making improvements, but these guys are definitely ahead, and that was one of the things that attracted me. So we start off at interview stage, make it clear, what we're about, what we believe in, how does it tie into you, what are your values, and you'll be amazed how some people haven't established their values. Which I don't blame, because it's not the sort of thing you wake up one day and say, right, what are my values?
Yeah, I think someone would have to ask me, if I was young again and they said, what are your values? I probably didn't write down my values till I was in my 30s, and I didn't live by them until I was older than that, even into your late 30s, when you actually felt them like that. This isn't just something you write down, it's something you live by. So I do get that some people don't have them yet, but it's something to think about, right? From a young age, it's easy to direct yourself if you've got it.
Yeah, and I'm the same as you. I had goals, when I left university and stuff, I had goals to achieve. But once I got past probably 35, I then started thinking more values, and actually, it made sense. And also, I'm not a reader, but I did start to read a little bit more, and so I started to pick up education and a bit more knowledge. So it did help. But then when they come here, the induction process we have incorporates understanding our values, what it means. We give examples. We have an annual Christmas event or end of year event, and we have awards for people based on our values.
Nice.
So that's a very clear distinction to based on performance numbers, based on values. So it shows you how important we treat the values.
And values are not directly not a direct result, or being really good at your job is not a direct result of the values, right? But it's pretty close, because your values are built on what makes you good. And they're also built on what, how you want to run your business. So they are relevant, aren't they, to results?
Yeah, and also, if you've got synergy there, then you're going to be productive. You're going to be more, as a business, you're going to get more out of that individual, than someone who doesn't align with your company values or doesn't appreciate them.
Yeah.
Because there'll always be a bit of a clash. But I think it's It's not the easiest thing to do. In fact, I think businesses are getting better, but the results are brilliant. When it works, when it clicks, the results are brilliant.
I think from a management point of view as well, values, once everyone knows what they are and they're not fluffy, it's much easier to manage people, because it's like a data-driven answer to everything. When you go, right, these are our values, is what you've just done then adhering to those? If it isn't, you know what I mean, it's wrong. So it's not like it takes the emotion out of it a little bit. It's literally, this is how we live our lives as a business, and are you adhering to it? It makes it much simpler to
I agree. Yeah.
Good. So I know I say this, but I was supposed to keep half an hour, but I'm still going on. But how are you going to see this year at UTB? What do you think kind of the challenges and the pluses are for this year ahead?
So we ended last year as a bridging team. Our financials are very strong, which is excellent. It was my first year in the bank. Brought in quite a bit of change in terms of structure, cultural change.
Out of interest, was that a good time to do that? Because obviously the market was interesting.
Probably wasn't the best time, but I had a vision.
But you got that's a good time to sharpen your processes. No, if it's
I think as a leader, if you've got a vision, the vision I have for my team, everyone knows from whatever role you are, everyone gets in a room and it's shared, it's presented to everyone. There's always, the market's always going to throw curveballs and stuff, but the reality is if you've got your passion, you've got your belief, then stick to your vision, keep going at it. Yes, we might have to put things backwards and we might have to move things around, the priorities, but it took us a good 8 months to feel like, yes, we've done the right thing. As a senior management team, the business is now benefiting, it's working, and we've managed to maintain our financial performance, which was absolutely, the priority was the culture and the structuring, but we managed to hold both together, which was excellent.
If you can maintain your values whilst maintaining your balance sheet, it's a good. You've done all right.
Yeah, it was very, very good, and actually, but it took 9 months for us to realise this is actually going to pay dividends, and it paid. We're probably ahead of the curve. We're probably good, maybe 6-12 months ahead of where we thought we would be, because there's a lot of stuff done.
And
but again, I was an outsider.
Is that related to how staunch you were with sticking to the values and the people and that kind of thing? Does that make a big difference?
It's the values of the people. A lot of my personal values align with the banks, and so the bank supported me 100%. And I think again it goes down to I felt fearless in what I was doing, and now it's testament to to my bosses, the fact that they backed me even in a challenging market. They backed me because I did say to them, we will get this right. I've done it previously and I think we'll get it right. But I was new to bank, meeting lots of new people that didn't know me, I didn't know them, and it takes a while. But when it did click, it clicked well, and I think that set us up well for this year. And this year again, there's small green shoots that we've already seen in the market, but it's not going to be a completely rosy picture this year. There's still going to be.
We just have a good couple of years in front of us. That'll be nice.
But I think 2024 is more about stability. Making sure that you again lending prudently. But I think the market in general is looking in a better shape, more stability. There is an election this year, so we'll see. But I don't think it'll have that big an impact on the housing market. And
hopefully they'll do something for first-time buyers and that.
You'd hope so, but I also think going into 2025 is when I think, as a lender and as a market, you could educationally assume that's the time to think. Now we can. If you're going to put the foot on the gas, I think it will be around that time. I think this year people want to do well, but make sure that they're still managing their risks accordingly.
It's interesting that when you put your foot on the gas. I'm sorry, I keep meaning to finish, but I'm not. Are you all right for time?
Yeah, no problem.
Oh, good. Yeah. About putting your foot on the gas, because, for instance, it's been a tough market for us, right? Recruitment wasn't great in 2023, but we put our foot on the gas in regards to growth for the business, which means we probably didn't make as much money. But if you grow you get a bigger piece of the market pie. So it's an interesting time as to when to do it, because obviously when you put your foot on the gas when everyone is, you can't really gain much more of a market share, can you?
No.
But it's the timing wise, because obviously we've also got operational costs and that kind of thing. But
Yeah.
timing wise is a tricky one, isn't it, as to when to grow? Because I feel like if we push everything now and grow in a tough time, market share wise, we're winning later on. If you just have to be able to sustain it. But is that similar?
So I think, in the bridging space, the pie might get a little bit smaller this year. So for us, it's making sure our market share is sustained as a minimum, but also where we can grow. We have a dedicated unreg team now, which is doing well and is in the early stages. But we know where we can grow, where we want to grow, and actually, you've got to be realistic. I do our budgets for the bridging side, and actually margin, compression's been a big issue in the market for most lenders. And actually, looking forward, forecasting is the margin expectations. Are they realistic? Do we adjust them? You have to have those adult conversations with your board, and when you have those conversations, you then get a feel for what growth is feasible and is not. And I think that's the key thing is, from my perspective anyway, is I think if we've got the stability, the foundations, I like to see it, the old analogy of a tap is that the water's there, but we control the flow, and that's the key thing. If you're in that position, you're in a good space.
Yeah, good. That's a really useful way of finishing. Thank you, Matt. I appreciate your time. If anyone wants to get hold of you, obviously all of your relative information will be on all our socials. But if anyone wants to speak to you, what's the best way of getting hold of you?
You can all our details from a business point of view, all our lending details and sales teams, all on our website, which they United Trust Bank they've got access to. The sales team are out and about. We actually, as an outfit, are more inclined for people to contact us. One of our USPs is that we're approachable, accessible, so there's always ways to get hold of us. And me personally, if they don't already know me or anything, if someone wants to reach out, then I'm on LinkedIn, and then a lot of people do contact me through that medium. It's no special backlines for me, no.
Good stuff. Thank you, Sundeep. I really appreciate your time, and thank you to everyone listening and watching on YouTube. I appreciate your time, Sundeep. I'll speak to you soon.
Brilliant. Thanks a lot. Take care, Marcus. Cheers.